Good evening to all. At the outset, I would like to thank FEDAI for giving this opportunity to me and as well as the panelists for this panel discussion. Thank you, sir, Ashwini sir and Chairman FEDAI for this opportunity. I also would like to thank our SBI's DMD, Baldev Prakash ji, for accepting the request for becoming panelist for today. It's a very short notice for him, but still he has accepted. Thank you so much, sir. On my behalf and on behalf of FEDAI, I would like to extend my heartfelt gratitude for having accepted this request. And also now I request other panel members. Dr. Aditya Gaiha, sir, CGM in charge, Foreign Exchange Department, RBI, to come on to the stage. And Dr. Aditya Gaiha, sir, has completed his BE Honours in Electrical and Electronics Engineering and MSc Honours in Physics from BITS Pilani. He also holds degree in Law and Finance from Cass Business School, London. He has completed his PhD in Economics from IIT Mumbai. He is a certified associate of the IIB-NF. And Dr. Aditya Gaiha is with Reserve Bank of India since 1996 and has over 28 years of work experience in the areas of payment systems and information technology, public debt, banking and non-banking supervision, exchange controls, and reserve management. He has rich experience with multilateral agencies, having worked as Director of Finance with the SARC Development Fund headquarters in Bhutan and as Senior Finance Sector Expert in the area of exchange controls with the IMF headquarters in Washington, D.C. Presently, he is Head of the Foreign Exchange Department in the Central Office of the RBI Mumbai. Now I request Shri Arup Rakshit, Group Head Treasury, HDFC Bank, to come on to the stage. Yeah. Thank you, sir. Shri Arup Rakshit is the Group Head Treasury of HDFC Bank. He leads the Treasury of the bank and is responsible for all the functions, namely ALM for the bank, customer business and for FX and interest rates, bullion business, bond sales distribution, sales and distribution, FX and interest rate trading. Additionally, he is also responsible for the Gift City branch. He joined the bank in 2006 and has held leadership roles at Treasury sales earlier before taking over as the Treasury head. He has a rich working experience of more than 31 years. Prior to joining the bank, he worked with Deutsche Bank and ABN AMRO, where he was in charge of Treasury sales. He holds a BTech degree from Indian Institute of Technology, BHU Varanasi, and a master's degree in Business Administration from IIM Calcutta. He is an active member of Management Committee FEDAI and India FX Committee. In his free time, Shri Rakshit likes to read ancient Indian literature and enjoy watching sports. Now I would like to introduce about our SBI's DMD, Baldev Prakash ji. Shri Baldev Prakash, DMD and Group Chief Risk Officer of SBI, is a career banker having a rich experience of 34 years. Having joined in SBI in 1991 as a probation officer, Shri Baldev Prakash ji has an illustrious career with rich experience of working in various segments of banking, majorly in retail banking, leading him to a place in the coveted SBI Chairman Club in 2013 and 14. Recently, he has completed a very successful 3-year tenure as MD and CEO of J&K Bank, transforming the bank 360 degrees by bringing path-breaking improvements in financial, technology and governance structure. Shri Baldev Prakash ji also had a successful tenure working as India-based officer at Muscat from 2007 to 2011. He is working as Group Chief Risk Officer at SBI from January 25. Now coming to today's panel discussion, it is the last program. We know the difficulty for the participants, but still we will try to make it as lively as possible. RBI's Executive Director R.S. Rathosar has already touched upon about the SROs. The topic for discussion for this panel is evolving role of SROs in changing regulatory landscape from directions to delegation. We are all aware SROs are non-governmental organizations. These are established by the industries or organizations which they regulate. SROs are responsible for setting the standards. They are also enforcing these standards for conduct for their members. They operate independently but under the oversight of the statutory authority like RBI and other statutory authorities. The primary objective of an SRO is to complement the regulatory framework. There are multiple benefits due to these SROs. The benefits are one, industry expertise they can provide, and they can reduce the government burden. Third would be flexibility. Fourth, better compliance. They set the industry standards, resolving the disputes within the sector itself. They also play a critical role in capacity building, knowledge sharing, industry-specific, sector-specific knowledge they keep sharing. And again, they also enhance the confidence of all the stakeholders through self-policing. And there are also some challenges for these SROs, like conflict of interest. Again, enforcement of limits, the monitoring part, and also potential dominance by large players within that sector. Fourth is fragmentation. Likewise, there are some disadvantages or some challenges. And in this panel discussion, in the next 40 to 45 minutes, or whatever, max, we will try to close as early as possible. We will be discussing starting from the historical role of SROs and how the SROs evolved over a period of time, and what are the key factors that have driven the shift from directive to a more delegated model of self-regulation, how FEDAI, FEMDA, YAMFI and other SROs are shaping the banking sector in India, what structural or policy changes would further strengthen the role of these SROs in India's financial ecosystem. With this brief intro, I would like to ask the question to Dr. Aditya Gaiha. Sir, self-regulatory organizations have played a crucial role in maintaining market integrity and best practices. Over a time, their role has transitioned from being directive-driven to a more delegated model, aligning with evolving regulatory landscapes. Given this transformation, I would like to ask this question to you. How do you describe the historical role of SROs and how has it evolved over a period of time? What key factors have driven the shift from directive to a more delegated model of self-regulation?
Thank you very much. Yeah. And at the outset, good evening, namaskars, and happy Holi to all of you. And of course, I was wondering why we are having it on Holi, but then having said that, so SRO historical role, actually, our ED Ratho Sahab has also explained, so I won't go too much into the detail. In various areas, especially in the area of financial regulation, in certain jurisdictions, historically, sometimes SROs have even preceded formal regulatory authorities or statutory authorities, and then over a period of time when the statutory authorities have come up, they have actually followed the kind of framework which has been laid down by the SROs and then taken it up. In many cases, it has been the other way around. When statutory regulatory bodies have been set up first, and then SROs have followed through afterwards. Once the regulated entities become mature enough and they have that degree of confidence to understand that laying down the rules of the game are much more in their interests in the long term, so then they come through with that. So sometimes it's the other way around. In the case of India, if we look at, especially with regard to the question of why we are having more of delegation now, if you look at it, last 10 years or so, we have started having more, focus towards principle-based regulation and also principle-based supervision. So, in case of the supervisory thing, if you look at the Reserve Bank's supervisory framework for regulated entities, it has become more and more principle-based. We have a risk-based supervision. So, we look at things more from a forward-looking angle. We don't go too much into the transaction part of it. And therefore, we understand that the players are mature enough to take care of the compliances which are there in general. And more so because the regulatory framework is at times not possible. We don't have that possible to make it so flexible at times. And keeping in mind so many disruptions, technological disruptions which are there, and other developments which happen, we expect that SROs will be able to take care of the delegated roles. So more and more principle-based things. In the Indian context, if you look at the recent thing, we have had the trade guidelines under FEMA put in public domain. If you would have seen that, you would have seen that there's a lot of delegation and there's a lot of principle-based kind of way forward for trade guidelines. So if you look at it, we are looking forward to an SRO like the FEDAI to put the focus on its constituents, work with them so that they can in turn form entity level principle-based kind of processes so that the trade guidelines are becoming very liberal, and it releases the entire external trade. We are able to achieve the overall national objectives of 1 trillion. So this is one of the reasons. Technological advancements, again, we cannot keep on changing individual regulations. We want to move away from prescription-based regulation. So as we move away from prescription-based regulation, it becomes necessary that the regulated entities regulate themselves. They share with each other the experiences they have, and based on their shared knowledge, they are able to move forward on a basis which is more delegated rather than supervisory or the regulatory bodies prescribing it.
Thank you so much, sir, for the elaborate explanation. Now we will go to Arup Rakshit ji. The role of FEDAI and other SROs in India's banking system has been evolving, especially in forex and trade finance. With increasing globalization and regulatory shifts, their influence is set to grow further. Looking ahead, how do you envision the role of FEDAI and other SROs in shaping India's banking sector in general and forex and trade finance landscape in particular?
Thank you. Thank you, sir. I think Dr. Gaiha already mentioned that on a principle-based approach, how things will look like. So let me start from there. But before that, my apologies, the discussion would be more on a general state. So if I make some statements which can go against some general principles, my apologies beforehand itself, because this is a more structural discussion. So I think moment you are getting into a principle-based approach, which the regulator has highlighted, and now even in the trade side, the larger challenge comes in that there needs to be a lack of regulatory arbitrage should be there between market participants, because that can disrupt the market. And the idea is that the market should not get disrupted, and that's where I think FEDAI has a very large role to play in the trade part. FEDAI has played a role, and overall we have evolved in the forex market. So forex market is a lot more evolved in that state, but trade needs a lot more, because we have, for 75 plus years, India has worked on a prescriptive model of trade. Now, when we are going into a principle-based, we will have to be very careful. We saw that when we moved in the foreign exchange in 2020. Now, that came in the middle of COVID, so activities was a little less, so it was easy. And I remember the number of discussions where the market participants have had during that phase before introducing that in the system. So, and trade is a lot more complex, and there are a lot more complex part of it. So I foresee FEDAI coming into that in a much more strong role, which we have to do, and we have to take this forward in that sense.
Thank you, sir. Now we'll go to the third panelist. Uh, Technology, especially AI and ML automation, is transforming the regulatory oversight by improving surveillance, compliance, and risk management in financial markets. In this context, sir, how do you see the role of technology, particularly AI and automation, in enhancing the oversight capabilities of SROs in the forex market?
Yeah. Thank you, Srinivasa. Good evening, everybody. So technology is playing a significant role in all aspects of our functioning. And the role of technology in functioning of SROs cannot be undermined. What I see, the amount and the complexity of data, which is increasing every day, it is very much needed that this data should be analyzed effectively, proactively, by way of using the technology tools, particularly the AI tools, and then arrive at the proper market insights and sharing it with the participants as well as with the regulators so that the effective proactive risk management and the fraudulent activities can be checked proactively. I believe the importance of technology is going to increase every day. The amount of data and the complexities are going to increase. So having said that, number one, then the second thing which is very important is now we have to have a continuous monitoring of data on the go. And without the effective technologies with AI and ML tools, it is just impossible to do that. Are we able to, we have to do it, and we are able to do it with the improved technology tools so that the better risk management and the compliance is ensured in the participants, as well as the proper insight is given to the regulator. And the third usage which is coming to my mind is for developing the effective models for proper risk management in future. We need to have the correctness of data for developing that models. And if the data has been generated with the more usage, effective usage of technology, I think the effectiveness of models going forward can be much, much better. So that is what my take is.
Thank you, sir. Now coming to Aditya Gaiha, sir. With RBI introducing a structured framework for SROs few months back, particularly in the fintech space, there is growing discussion about the role in complementing or potentially overlapping with the existing industry bodies. As the financial landscape evolves, it is important to assess how these entities coexist. Given this backdrop, how do you see recognized SROs contributing to financial landscape? Do you see an overlap of existing industry bodies and new SROs?
Yeah, so I'll limit myself to some extent to the foreign exchange regulations part also. And just to give you a brief on the foreign exchange part also, all the authorized persons, although we have an existing SRO, which is the FEDAI, we are working on a framework which we will actually bring in force very soon for the authorized persons, where we will formally kind of allow entities, including FEDAI, to register themselves and become formally SROs in the foreign exchange area. Now, having said that, and looking at the kind of possibility of kind of overlap between the activities of industry bodies and SROs, my take is that SROs are having certain governance structures which get defined, which make them, owned in a decentralized way. Every industry partner who's there comes in at an equal level as an equal partner in the SRO. So the possibility of monopolistic tendencies taking over, which are likely in terms of industry bodies, is very less. So obviously the role of regulation insofar as the exchange controls or any such financial regulation is concerned, the SRO will have to take the primary role. because it will be much more neutral and because it is created as a structure to form the bridge between the regulated entities and the regulator. Insofar as industry bodies are concerned, their objective will be slightly different because they will bring to fore whatever important issues are there and developments are there in their particular industry and try to see whether they need to have some kind of regulatory oversight or whether the regulatory oversight is there which needs to be changed. So they are more from a different perspective, more from the regulated entities perspective, whereas an SRO has a more neutral role to play. So the governance part, which will also, in fact, get very comprehensively covered in the guidelines which we have been discussing with FEDAI for a couple of months now, will also take care of this, that the SRO becomes much more representative and it will therefore, I feel there will be no kind of conflict in that sense. The SROs will have their own role and the industry bodies will have their own kind of take.
Thank you, sir. Again, sir, one more question to you. These SROs are nowadays in this era of where financial markets are more interconnected than ever. Cross-border transactions come with increasing complexities. SROs must navigate different regulatory regimes while ensuring consistency in standards. Given this backdrop, in a globally interconnected market, how do these SROs address cross-border challenges?
Yeah, so this is actually becoming more and more important, and a lot of examples also can be given here. Because what is happening, especially if you look at something like exchange controls, we still have capital controls which are in place. Many other jurisdictions don't have that kind of capital controls. And as our regulated entities start functioning in other jurisdictions, they will have to tread carefully because they have to conform with the regulatory framework of different jurisdictions as also in India. And with the kind of presence that we have today in terms of our regulatory entities, our banks and financial institutions operating outside India, their role and their presence outside India continues to be very minimal. So the kind of influence they can have on regulations outside India will be again very minimal. So that becomes a very big challenge for them because they have to not only comply with regulations of an overseas jurisdiction, but also they will then bring in pressure to the domestic regulators that they would want certain changes so that they can comply with both the jurisdictions at one point of time. So this has become very complex. Suppose you look at something like, internationalization of INR. This has become very evident here because when we are dealing with various countries where we have signed local currency arrangements, we find there is a differential regulatory approach in many of these jurisdictions. We have signed a local currency arrangement with the UAE where absolutely no capital controls are there. We have signed a local currency arrangement with Indonesia where they still have capital controls and probably much more rigid capital controls than we have in India presently. So we are finding that a bit of an issue because we cannot prescribe something which is going against the kind of capital controls and the calibrated path that we are following today. But we have to also, bring on board entities from Indonesia or UAE who will be functioning here and vice versa. So then the SROs require, the kind of role becomes very, very important because they will have to actually guide the regulated entities as to what can be done in other jurisdictions and how they can actually look at the regulations onshore and offshore and have some kind of a common ground where they can meet the two regulations separately. And this is becoming more and more important. We are finding this as a challenge, especially with respect to some things which are slightly more controversial in the sense we have, third country stipulations put in place at points of time, and we have our regulated entities quoting those third country stipulations and saying they would not like to do INR to INR transactions because of those third country stipulations. I think the indication and hint I am giving is sufficient for all of you to understand. But I find that very, very restrictive, very conservative, because I find sometimes the regulated entities, especially when it comes to foreign exchange, are more conservative than the regulator itself. And that should not be the case. So this is something where the SROs have to come in because we cannot give a guideline in these areas from a regulatory perspective, that the SROs will have to do some kind of moral suasion. And this is where SROs is very important because they will provide that moral suasion between the regulator and regulated entity to see that these transactions are taking place in a seamless manner. Thank you.
it would be more challenging for SROs as well. In this.
Yeah, I understand.
Yeah,
I
yeah.
understand.
Now over to Arup Rakshit ji. For any self-regulatory framework to be effective, market participants, all market participants, must have confidence in its fairness and transparency. Since SROs are industry-driven entities, trust building becomes even more critical. My question to you, sir, how can SROs build credibility and trust among market participants when they are industry-driven entities?
So let's start with looking at one of the, whether it's an official SRO or not, but recognized in that sense is ISDA. Now, ISDA has been there since 1985. It has gone through various different economic crises, but it stands itself and it actually has a respect across 75 countries who have signatories to ISDA. So that has evolved. Now, if you're saying that as market participants, we are also part of the SROs and how this will, how one builds trust, effectively there has to be mutual trust between participants in a market, mutual trust between the SRO and the regulator and SRO. So it has to be a mutual trust. Now I'm reminded of an old story by Munshi Premchand, Panch Parmeshwar. If anybody has read it, they will realize what it says, that as you become so the story goes that a very low, economically lower end of the strata guy is made a panch, sarpanch, and obviously people are making fun of it that we can manipulate this guy, but when he sits on that chair, he becomes a neutral guy. So it's like how jury system used to work. If you have to, there has to be a trust coming in, and I don't see a reason why there would be a conflict. Yes, there will be some larger player, some smaller player, but once you're sitting on that panel, everybody is equal. So it's an evolution. If there may be initially conflicts, some of the decisions may be going against some of the big players, but it is an evolution. If you have that mutual trust, it will stand it on its own.
Thank you, sir. Now over to Baldev, sir. Recently, FTX got collapsed. The collapse of FTX has reignited the discussions on the need for stronger regulatory oversight in the cryptocurrency space. While government regulators are still defining their approach, some SROs could play a role here. Some believe that SROs could play a role there. So, how do you see SRO may be suited for this segment of cryptocurrency space?
Yeah. So, I believe that SRO is a very cost-effective mechanism working between the participants and the regulator. FTX is a significant incident, but what we have learned from this incident, are we having an effective governance structure, having proper governance standards, and the learnings from this incident is properly shared with the participants and the corrective steps have been taken. I think that is the role of SRO.
Yes,
I believe if we take these factors into account and then improve the standards, improve the governance standards, improve the accountability and the transparency in the system, there is an important role for SROs, not only to stay, but to improve upon further. That is what I believe. I think SROs should continue evolving, as Mr. Arup has said. The trust factor is very, very important from the regulator side also and from the participant side also.
okay, sir. Over to Aditya Gaiha, sir. As SRO gain more autonomy in regulation, how can they strike a balance between compliance enforcement and market development? Do you foresee a potential risk of conflict of interest? This is the challenge which we discussed earlier. This is the major challenge for SROs. As they are within that industry, uh, entities. Within that only they operate. So there is a potential risk of conflict of interest. How do you foresee this potential risk of conflict of interest?
Yeah, so again, coming back from the last maybe 1 or 2 years experience, as I mentioned, we had moved to a more supervisory kind of framework, which was principle-based, risk-based. And but the last 1.5 years, we have tried to associate ourselves to do some kind of transaction testing with individual supervisory teams which have gone to the authorized dealer banks. And we have found a large gap which is there. And we have then found that the banks have had a lot of difficulty with respect to having people who are having the right set of skill sets because they get transferred frequently. And the role of the SRO in actually keeping the entire set of people who are dealing with foreign exchange transactions, for example, updated, rests on the SRO and also the individual regulated entities. And therefore, the compliance part of it, as we move on to more and more principle-based regulation, will have to rest on the regulated entities, and the SROs will have to come in the picture because they will have to guide them, so that the common kind of principles are adopted, and there is no disconnect, and the communication also between the regulated entities and the regulator takes place through the SRO in a much more efficient manner. For example, recently we had this issue regarding SBLCs issued against non-resident deposits. I think some of you, at least who have been associated, will be aware. So there was a lot of communication gap between what we had said and what our regulations had said earlier, and the way the market was interpreting it in the last decade. And then when we gave certain clarifications on it in October last year, again some communication gap was there. So immediately we had FEDAI, they came to us, they asked us, we gave them the clarification and requested them to circulate it to all the chief compliance officers of the AD bank so that the uniform communication goes to all the banks. There's a uniform interpretation, and therefore the compliance part of it actually becomes much more and more important. And I believe that market development and compliance are not, they are not at odds with each other. They are not conflicting with each other, because market development can only happen when the rules of the game are set right. And if the rules of the game are not there and there is total jungle raj, then obviously there can be no room for any kind of market development at all, because you will have conflicting, objectives which are there of the regulated entities. They do not know where is to draw the line, what kind of transactions are allowed, what are not allowed. So there is no conflict there, because unless and until, and that is something which all commercial entities realize as they mature, that unless and until the rules of the game are there, they will not be able to actually even get a commercial benefit out of anything. So this is something which is going to have to be put in place, especially if they do have some area where they violate the guidelines and the enforcement is very strict in terms of the penal and other penalties that are enforced by the regulator. So therefore the compliance part and the market development are not at odds with each other, and the SROs in fact are the best suited to take care and draw the balance between the two of them. Now, in terms of the conflict of interest, this mostly gets taken care of at the governance part. So if the SROs are well governed, if the regulated entities are well governed, which are anyhow prerequisites for any kind of a principle-based regulatory framework, because principle-based regulatory framework comes in only when the market participants are mature enough. And that we understand that the market participants after 75 years of independence are mature enough. And that is why we are moving into a principle-based kind of a thing in every area, whether it's banking regulation or foreign exchange regulation. So therefore, we understand that part of it. So if the governance structures are in place, I believe there will be no conflict of interest. Thank you.
Sir, challenges are not many, but advantages, benefits are many due to these SROs. So one more question to you. How you are going forward, how you are looking at these SROs playing a role in fostering market growth?
Yeah, so in fact, as I was mentioning earlier, we are finding a lot of conservative, thought in the stakeholders themselves. We have come across instances where, for example, in the INR part, as I was mentioning earlier, banks have gone to the extent of advising their constituents that don't do the INR, dollar is better. And personally, I have had this because 2 weeks ago I was in Colombo. I interacted with one of the largest importers of onions and other consumable vegetables in Sri Lanka. And there were two brothers who had been doing this for the last 40 years. And I asked them why they can't do it in INR. They said their onion contractor or the exporter from India disagrees. He doesn't want to do it in INR. So I asked them to put up a direct call to the onion contractor in Nasik. And I talked to him and I asked him what was the issue. He said, there is an issue because this is going to lose out because of the rupee devaluation. So then I said, you tell me one thing, what are your input costs? Are they or in rupees or in dollars? Are you putting dollar inputs into your farming for onions? So he said, no. Then I said, what is your problem then? He said, I went to my banker. I won't name the bank because it's not very good to do it here. But he said, I went to my banker and the banker said, no, don't do it in INR. It's too complicated for us. Do it in dollars. So that's why they're doing it in dollars. So this is what I'm saying, there's something we look forward to institutions like the FEDAI to bridge this gap. We're looking for regulated entities to bridge this gap through the SROs and bring about the changes. We are all talking of a paradigm shift. A paradigm shift can never happen. Paradigm shift is always something where you have to break through the barriers which are there. This paradigm shift is not going to happen unless SROs and regulated entities look forward to what we are trying to aim and make the objectives, as our Deputy Governor was saying, by 2047 we want to become a developed country. But we can't do that unless and until all of us make that paradigm shift. So we are looking forward to the SROs and the regulated entities to break through all the things which have already happened in the past 75 years. Unless we do that, we won't be able to move forward. So this is our expectation. Thank you.
I believe, sir, these SROs will definitely bring in paradigm shift in the financial ecosystem. Now, question to Arup Rakshit ji. With rapid advancements in fintech and decentralized finance, traditional regulatory frameworks are being challenged. The question now is whether SRO should take an active role in overseeing these innovations or allow market forces to shape their adoption. What's your perspective?
So let me take a step back and start from where Dr. Gaiha was mentioning. So what you are suggesting is that the fintechs are doing disruptions, right? I think first of all, and I am representing a FEDAI here, first of all, we, FEDAI as almost a SRO since it's pending, we should disrupt ourselves. We are also not in a position to play the correct role of a SRO in the way it is being envisaged if we are still following the old method of disruptions, our old method of working. Disruptions is a double-edged sword. So what fintechs are doing is a double-edged sword. Disruptions has a lot of positive and a lot of negativity also into it. As a normal market practitioner, I don't want disruption. Disruptions will create unnecessary chaos, and as a banker, I will have to change my processes, policies. But disruption is there for reality. And unless we acknowledge that disruptions is going to be there, we cannot move forward. So what happens there? The disruptions have to be within boundaries. The boundaries have to be qualified as what it is, and there is the role of the SRO comes in, that you have to govern the boundaries. You can't be allowing complete unregulated disruptions to happen, because then it can really disrupt a market, and if a market issue happens, then the confidence goes, and you're looking at a country confidence level. So you cannot allow that. But within the framework of the boundary, you will have to allow the disruptions. The boundaries will keep changing. The boundaries, in fact, it's not a square boundary anymore. It's a square box anymore. It's a completely an amoeba kind of a scenario. So it can grow in any form and shape. So you'll have to keep a watch on the boundaries, but keep it within the boundaries.
Thank you, sir.
If I can just
You can
so
supplement.
he was rightly saying disruption is positive and negative, but actually we're looking forward to some disruption from the regulated entities now, because we are finding too much of conservative thought. So we are looking for disruption, and as he rightly said, once a disruption happens, we can always fix that boundary together. We can sit together as a regulator, as the regulated entities and the SRO, and make that boundary. But the disruption has to happen, because unless the disruption happens, no paradigm shift. Thank you.
Yeah. Over to Baldev Prakash, sir. This is the last question. It's good news for all of you. Yeah. Sir, while SROs play an important role in financial governance, there is always room for improvement in their structure, powers, and accountability. To further strengthen their impact, what structural or policy changes would further strengthen the role of SROs in India's financial ecosystem?
Yeah, I think a very, very pertinent question for today's discussion. First, I think we have discussed it, all three of us, earlier also. Having an independent board and independent governance structure, and then ensuring that there's a trust, the integrity and transparency and accountability in the system will go a long way in improving the overall SRO structure. And I believe the interactions and the coordination between various industry SROs, the financial and others where successful SROs are functioning nationally as well as abroad also, can go a long way in improving in the working and functioning of our SROs in the financial sector. The key functionaries are equally important. Are we exposing the key functionaries of our SROs with the best of the trainings which are available so that the appropriate corrective steps are taken in our functioning also, I think will help in going forward. And as we mature in the future, can we think of having some maybe statutory powers for SROs to enforce discipline among the participants? So that also maybe in future we can think of as a policy matter. That's what I want to say.
Sir, Dr. Aditya Gaiha, sir, would you like to supplement with regard to the structural or policy changes which would further strengthen the role of SROs?
Yeah, so as he said, one of the things is governance, and the entire thing has to be very well diversified. If it is well diversified and it includes each and every, for example, the one that we are thinking of, authorized persons would necessarily have to have the AD category 1, the AD category 2, 3, and also the FFMCs till they are there, because we have had the AP framework also put in place where we want to slightly have the FFMCs moving in a different direction. So we'll have to have each one of them come up. They'll have to take ownership. They'll have to be well diversified. Everyone will have to supplement. And as he rightly said, the training and skill development is very important. And that part of it is something I think which is something where we need to work very hard. Because as the things are evolving in a very, very exponential kind of a thing, AML or whatever, we have to take care of the artificial intelligence and machine learning and everything. All the disruptions we have to take care, we can only take care of it if we have a very well-governed, well-diversified and professional body as an SRO. And that can only happen once the skills development happens.
That's true, sir. All the organizations, including banks, are embracing AI, ML and all these enablers. They are taking a lot of initiatives. Arup, Rakshit, would you like to add anything here? Yeah.
Currently, the way we have been working in the SROs, or at least related to the markets part of it, it's a lot more the banks or the financial institutions led, where the management team of the SRO itself is there is some level of expertise at a top level, and after that it's more of a implementable team. I think that entire concept has to change. It has to be a very crack team across board, across various layers, with a more guidance coming from the market participants, rather than the market participants being the main players in that entire scenario.
That's true, sir. So, I would like to thank all the delegates for your kind attention and the patience. We have concluded this panel discussion. Again, I would like to thank FEDAI for this opportunity, for giving this opportunity. Thank you, sir.